Good afternoon, everybody. This is Mark Lynn with Healthcare Business Specialist. I'd like to welcome you to today's webinar on Provider Relief Fund and cost reporting. And today's date is September the 15th, 2021. This session is being recorded for future viewing. Again, my name is Mark Lynn, a CPA from Chattanooga, Tennessee. Here is my contact information if you need to get a hold of me. Danny Gilbert is working with us as well. She is off today. She's at Disney World, so I wish I was there. But Danny will not be here today to help with questions, so I'll try to get through those myself. Here is what we do. By now, you already know this. We have a lot of information, so I won't go through everything we do. If you're not a member of our Facebook group or the Rural Health Clinic Information Exchange, it's not ours, but it's everybody's. We have about 2,800 members now. Please join. There's a lot of great information, a lot of great consultants on there that will help you with issues that you have and your questions. Here is our website. This is where we will be putting our information for this webinar. I did put the handouts over in the sidebar there, so if you want to click on there, it may or may not work. We've got about a 50% chance of it working because these files tend to be very large, and GoToWebinar does not like those. If you don't find them there, you can go to our website at ruralhealthclinic.com COVID-19 and click on a link that looks like this, and you will have your slides if you want to write and take questions there. And let me see here. Okay, we're already starting getting questions in here. I'll take the questions at the end unless it relates to something technical. So let's move on. Information is current as of today. Like I said, I just finished these slides about 10 minutes before the session started, and we were trying to get everything up to date. Everything is ever changing, and I'm going to give you some information that will be different from the last time we had one of these. In fact, they changed basically where everything was from a month ago when we did this same webinar. Questions, again, you can type those on the sidebar here. Hopefully I'll have enough time to answer those at the end. And again, the session is being recorded and the slides are available in a couple of places that we've already talked about. The agenda for the day is there's going to be some new money, phase 4 and ARP funding. We'll talk about that. Mandated COVID vaccines for RHC staff. That will be a fun subject. 60-day grace period. That is a fun subject. Yay, that's the news we were all hoping we would hear, and we did get that. And then we'll go through some of the PFR funding, expenses, lost revenues, and metrics. Some of these slides will be the same as last time, so I will skim over those. And then others have changed a little bit since then, and we'll spend a little bit more time with those. And then the last piece, we'll go some cost reporting. I know a lot of you guys are doing monoclonal antibody injections or infusions, and you're giving COVID vaccines for your patients, and how is that going to work on your cost report? So we'll go through a little walkthrough of a sample cost report for that. And so let me see here. Make sure. Oh yeah. Make sure. Okay, make sure we're good. I got a phone call there. I was worried that I was doing something wrong, but it looks like all the buttons are touched, or buttons are good, so we should be good. Phase 4. Phase 4 funding, ARP provider relief funding. I always quote Notorious B.I.G. just about every day. More money, more problems, more money in the system. Seems like I always get past all these deadlines. I'm just about to make it past cost reporting deadlines, provider relief funding deadlines, and then there's more money and there's more deadlines that we have to meet. So that's what happened just the other day. There was an announcement of $25.5 billion of new funds. 17 billion of it relates to phase 4 general distribution, and 8.5 billion of it relates to the American Rescue Plan. You will have to apply for those. That portal will open up on September the 29th, 2021. There is a webinar today at 4:30 Eastern time where they will tell you more about that. But here is the location where the website where you can find out what's out there right now. You are eligible for this money. As an RHC, that's one of the provider groups where it specifically mentions that you are eligible for it. And in here is how the money will be divided out. 75% for phase 4 will be based upon this formula here, and then 25%. And this one worried me. I put a question mark behind this because it talks about Medicaid and CHIP money and converting Medicaid rates to Medicare rates. I'm worried that RHCs may not get a lot of money from that just because we already paid a much higher rate from Medicaid than we normally would. That's the reason why we became a rural health clinic in the first place. So I've got some questions about how that's going to work to benefit our RHCs. So we will see. We'll see how that goes in the future. Let me open up the question here. Okay, good. Okay, good. I'm worried about technical questions here. Okay. Phase 3 payments, how these were calculated. The reason why I put this on there, there's 5 pages of just nonsense in there just to show you how complicated this thing is. There's really nothing we can do with that one. I would double check this one here, this rural health grants eligibility analyzer. I put one of our clients in here and they came out okay. I put another one in which was rural and in the middle of nowhere, and it said it was in an urban cluster and was not eligible for these grants. So don't think for sure that you're eligible for this. Double check that and make sure that you're eligible for this. You could be in one of these urban clusters. If you are in one of those urban clusters, I would reach out to Joe Lampard or John Lampard with HIPSA Acuum and talk to them about if that's really correct or not. Because sometimes Joe and John, well, they always know more about it than I do. So they may be able to help you with that. Phase 4 funding webinar, this is this afternoon. If you want to click here to this link, then it should register you, and looks like it's got the little dots on them. I think I messed up on that, but the link is posted on our Facebook group, and you can register there. It may work. I'm not sure, but that's this afternoon. You will definitely want to do that. Also, there's a lot of CPA firms that are out there that are doing webinars. PYA is having one next week, and they're really good. I've learned a lot from their webinars that they've been doing. BKD is another big accounting firm. Whiffley, everybody knows the 2 Jeffs in the RHC world. Whiffley's been having a lot of webinars, so watch for those types of webinars. They're very helpful in finding out this information. Okay, moving on from the good news, we'll get more money, we get a grace period. The bad news is that as a condition of participation, there are 17 different provider groups that have issued what's called CCN numbers. And if you get a CCN number, according to new laws, new regulations that will come out in this interim final rule, RHCs will probably have to have all their staff vaccinated. Surely there's going to be a way in there for you to opt out of that, either through religious or through medical reasoning. I know with Hep B and with tuberculosis and all those different types of things that you have to do. You're already mandated to do certain things under OSHA already, and there are opt-outs on there where you can opt out of that. You just have to. It's called a declination notice that you put in there. Hopefully there'll be rules there, so I wouldn't freak out and quit being, getting out of the program just yet. Although I've had a couple people already tell me that we're stopping. We're just not doing it. We're fed up with it. We're just closing. And so I don't do that. Let's wait. Let's see what the interim rules are and go from there. So let's just be patient with this as much as it's possible. Okay, let's move on to provider relief reporting. We did get the jump to joy on Friday of last week because HHS gave us a 60-day grace period. So this September 30th date that we've been all freaking out about, we don't have to, where we can breathe a sigh of relief. We don't have to have this done by September 30th. The deadline is still the same, but they're going to give us a grace period up until November 30th. So keep that in mind. It's not the end of the world if we don't have this filed. And I was worried because I know with cost reporting, our cost reporting due date was August the 2nd, and we probably had 20 or 30 cost reports filed late. People were just having a hard time getting this information together when you've got so many patients. This is the last thing you're worried about is a bunch of numbers and a bunch of gobbledygook money. You're worried about keeping people from dying. So I knew our cost reporting stuff was getting filed. That's not the end of the world. You basically, so as soon as we submit the cost report, all the issues go away. And with this, we're going to have an extra 60 days to get this done. So that's great news. Here's the link showing the announcement of that. Here's what the picture of the 60-day grace period looks like. And there was something called office hours, which was a strange event on Friday. Basically, I went online for an hour and a half. They didn't say a word, but you typed in questions and they answered them. They never answered my questions for some reason. I must have given them hard ones, but they did answer a lot of people. And this is one of them. It says the person was happy to learn about the 60-day grace period. How do you apply for that grace period? And they indicated to us that there's nothing you need to do. So you don't have to worry about applying or sending in anything or emailing somebody. This grace period is automatic. So that's good news. Okay. This is a lot of stuff that we've done already. What goes where, because we have so many different funds and so many grants out there that people get very confused on where they're supposed to report. We're going to be talking about provider relief funds over here today and how we report for these. We're not going to be talking about the RHC COVID testing funds. That's what the National Association of Rural Health Clinics does an amazing job with those. And so that's where you're going to be reporting on that website, rhccovidreporting.com. You'll be reporting that each month. And then the grant money that a lot of you guys received, that $49,200 and something that you got, you didn't get the money, you have the ability to draw it down. A lot of people say, where's my $49,240? I thought we had this grant. No, you have to draw it down when you spend it. That's going to be Elizabeth Burrell's cup of tea, and ask her with her questions about that. That money doesn't get reported on this PRF funds portal, and these the COVID testing and mitigation funds do not get reported on this portal as far as the use of them. So we'll go through that in a minute. And then here's a table that Nathan did that's just showing where all the payments come from. These three in yellow, these are what we will typically be reporting on. Typically, I see 3 payments that were received in 2020. It was in that second quarter of 2020 is when everybody received these payments. These are the 3 that you would typically be reporting in for period 1. That's what we're reporting by September 30th. Here's another table that the National Association of Rural Health Clinics published last week as well. It just gives you some good information about these different funds, because we've got a lot of different buckets and it's hard to keep up with those buckets. So this is a great resource. And if you haven't joined the National Association of Rural Health Clinics or the National Rural Health Association, I highly recommend that you do that. Your money is well spent with what Bill and Nathan and Shannon and I mean, all the different people at Sarah have done for rural health clinics over the last 18, 19 months. Same thing with Brock Allen, the National Rural Health Association. Those guys have done a fantastic job of lobbying for rural health clinics. Your money has never been more well spent than it has over the last 19 months. So I just blew up the portals there so you can see them later. We're not going to go over these. Here's what we're working on today, and we'll show you as we go through these slides here. Here is one of the questions. If you've not become a certified rural health clinic professional, the NARHC Academy, this is one of the questions that we had the other day in the Academy, and I'm going to borrow it real quick because the question was, don't we roll any RHC PRF funding with our PRF reporting? First off, when you see any, any is not going to be the right answer. And so my answer was, you basically just report the first and second distributions of the general distributions, and that big targeted distribution that you received on May the 6th, you're going to report that in these PRF funds. And you're not going to be reporting that $49K that you got for COVID testing and mitigation that you report to the NARHC every month. That money, you're not going to be reporting a use of that in these funds. And then and the second question was, I was under the impression that any RHC PRF funding received would be linked to the HRSA reporting portal. And is that true? And that is true. There's those 3 payments that most of you received during that second quarter of 2020 will be in there. You have to verify that you did receive those. So that will be important. Also, that 49K of COVID-19 testing funds will show up in other assistance received. It'll be on the top row of that report, and it will be on there as well. So there's a couple questions there. Here's just a summary of what's happened. I think we'll cover most of this through this. This is basically just a little history to sort of level the playing field so everybody knows where we are. I'm going to skip that. First steps, again, a lot of this stuff is from the last webinar. First steps is register. You guys should have registered already on January the 15th. If you haven't, go ahead and get your registration done. Read these notices, and they've moved all the notices around from the last time we did this webinar. And I think they've had a graphics team working day and night. There's actually, HRSA only has 1 accountant in all of HRSA, is what I'm hearing from people. And you can tell, because I think they've hired all graphic designers because they have beautiful graphics, getting good accounting answers to a lot of the questions that we have. That's been pretty hard to do. They tend to answer the questions with, here's a link, and I hate that. Just don't send me to a link. Give me an answer to what I'm looking for. Okay, so, but they have produced great as far as webinars and tutorials. There's all sorts of tutorials and information there that you guys can really follow along, and it is very helpful to do that. Again, this is the landing site where you need to go to get your information. It's completely changed from the last month that we did this. So, and they've got all sorts of guides in here: personnel recruitment and retention fact sheet, reporting guides. So there's a lot of material for you guys to go through and read. And of course, I said I hate when people give me links. I'm giving you tons of links today on this information, because in 1 hour we don't have enough time to go over everything. So here are the rules. And these rules have changed like 9 or 10 times. Not 9 times, 6 or 7 times over the last 18 months on reporting requirements. So and this is the last one is 11 pages long. The reason why I went from 7 pages to 11 pages was they put in all sorts of stuff about nursing home infection control, which has nothing to do with us. And it has been hard keeping up with this. It's like a game of 3-card Monte. The FAQs have changed so many times. At one time, you could get a big PDF of all the FAQs. There was like 60-something pages. Then they went away, and now somebody showed me the other day that it's back somewhere. I just can't find it yet, those 60 pages of FAQs. So I'll keep looking for that. The FAQs that I've seen, they keep dwindling and dwindling. And one time on expenses, there was probably 20, 25 FAQs. Now it's down to about 4 or 5 FAQs. So they keep pulling information away from us that's specific. So here are the provider relief fund post-payment reporting requirements here, and a great little graphic that's showing when the due dates are. And this document here, basically you can just click into any of these links. It's going to take you to all of these resources that you have. So very, very good information here that you guys can get a hold of as well. More graphics. They've done more graphics in the last month than I've ever seen anybody do in my life. So it looks good. Here's the top 5 frequently asked questions. I do like to go over those with people. May providers request an extension? The answer is no, but now we have a 60-day grace period. RPRF recipients required to report on each payment received separately. All those payments are going to go in. It's going to be based on tax ID number is what it's going to be based upon. So like I said earlier, you get 3 different payments in that quarter. You can report on all 3 of those quarters in this one report. May PRF recipients report and use use of all the PRF payments received in calendar 2020 and 21 during the initial period. No, you cannot report ahead of time. They will not let you do that. Can you ask for an extension? No, but you're going to get the 60-day grace period. After you complete your report, use of funds, will HRCA give you a notification, give you an attaboy? No, they're not going to tell you if you did it right or not. The only way you're going to find out if you did something wrong is they'll probably notify you. And if you do owe money, then you have 30 days to give that money back to them. Okay, and then they also put out a lost revenues guide on how the different ways that you can do lost revenues. There's really only two ways, option 1 and option 3. Option 2 is not available to rural health clinics unless you're, I don't know, some super RHC that I've never heard of, because you have to have 2 years of budgeted revenues and expenses that was done by March the 26th, 2020. I don't see a whole lot of RHCs that I work with that budget even 1 year, much less 2 years. But this document tells about how to do lost revenues. And then another document they came up with was on retention and recruitment. Some of the things that you guys can spend money on, because you guys are going to be getting some new money in besides the money that you've already received, and some of the things, retention bonuses, incentive pay. Yes, you're definitely going to have to be doing this stuff to keep people working for you in this medical field, because it is getting scarier and scary. I know my daughter wants to be a PA, and I'm just like, I don't know. We might need to rethink this career choice, because it seems very dangerous to me. But that's the dad in me talking. How to get started on entering the information in the portal. The first thing you want to do is get your information together. There's an Excel spreadsheet that you can download and use it to fill it out. So fill that out first, complete that spreadsheet, because when you get on the portal, it's going to kick you out if you don't do anything. I think it's like 15 minutes or so, and you're going to get kicked out a lot if you don't have your information ready for you. So complete those spreadsheets. Make sure you do every one of the sheets that's in that spreadsheet, and then document your work, because you have to keep written records. You don't have to submit these records into the portal, but you do have to keep them for at least 3 years, and attorneys will recommend at least 6 years to hang on to this as well. Here's what the reporting worksheets look like, and this is if you guys have $500,000 or more, you're going to have to report in a lot more detail than if you received less than $500,000. And again, most of our RHCs would have received less than $500,000 of monies. Metrics, they're going to ask you to fill out the number of employees that you have. The best thing I've seen for that is your quarterly 941 reports or your state reports. If your states are collecting state taxes from you, they typically are going to get a detailed report from you each quarter. If you can print those off or look through those, they will tell you how many full-time employees you had. You'll know who's clinical and non-clinical, and we've had to break that down in the metrics for the people that we've been helping do this as well. So you want to go through and figure out who's been separated, hired, furloughed. Again, this is for information only. There's not going to be any settlement on this. So if you have to it doesn't have to be as accurate, and you have to spend as much time on this as you would on something that's gonna be money. Here's the period of availability. You basically had until June 30, 2021 to spend this money. So you can't go out and spend money right now and then claim it for this period 1, which was for your reporting on monies received April 10th, 2020 through June 30, 2020, and you could have spent it through June 30, 2021. And of course, our timeline when we have to file this was September 30th with the 60-day grace period. Remember, this continues on. We're gonna have periods 2, 3, and 4 going forward, where we're still gonna have to continue doing these reports when you spent money and uses of this money going forward. Okay, and then there's just the time periods there, so we'll go past that one. Here is what your portal looks like, and it does have two-factor authentication, so that you will once you put your email address in there, it will send out a code, and then you have to put that code in, and then you have to put the password in, and it will kick you out pretty quickly. Okay. You do have to go through the reporting workflow. You're going to have to put zeros. If you don't know the answer to something, you're going to have to put a 0 in it to keep going forward. You need to save and next every time in order to get your information. What we're telling people is don't submit your information yet. These rules keep changing. They've changed a bunch of stuff in the month since I've done this webinar. What I always recommend people doing is just print off a PDF of the information that you have entered, and then go over. That's what we do to our clients. We print out a PDF of what's entered, have them look it over, see if there's been any mistakes in it, and then we're going to wait and push submit. And the September 24th is our date. We're going to push that, and we're not taking new PRF clients. If you've already we've done it for a few people that we know just really needed help, but we're not taking any new clients on this. We got too many to do already, and I was freaking out about September 30th. So here's what the first page of your portal will look like. These are just drop-down menus. If you're looking for an RHC as a provider type, you're not going to find it. So keep that in mind. We basically listed as either primary care practice, or if it's a pediatric practice, we'll put that in there. You're going to push save and next. Don't push save and exit, because it's going to send you right out of the system, and you're going to be back entering codes and stuff like that to keep going. Subsidiaries, most of our RHCs are not going to have this. Hospitals will have lots of subsidiaries, but rural health clinics will not. So we don't have to really worry about that. Here is where the government populates this information for you. You just have to verify it. So in this case here, this particular clinic, it's by tax ID number here. They basically got a deposit. I think this is April the 10th was the first time people got money of 2020. Then they got another distribution that was, I think, maybe April 20th or something like that, maybe somewhere around that date. And then they got that targeted distribution on May. Oh, there it is. May the 26th is when they got it. I should look over here. May 20. No, wait, I'm looking at the wrong date. I know, because I know this targeted distribution came in on May the 6th, I believe, was the date that the people got this. So anyway, they're going to give you this information, and you're going to verify that it's correct 99% of the time. Their information is going to be correct, and this is the money that you're going to be reporting on, this $155,993.43. Next page is if you receive more than $750,000 of grant funds in one tax ID number, you're going to be subject to something called single audit. What you want to do on that is get a hold of WIFLE or PYA, or one of those big accounting firms out there. They're going to have to help you with that, because that is big time. So most RHCs are not going to be subject to single audits, and you don't count the PPP loans or that loan forgiveness as a part of these grant funds towards that $750,000. So that should help you guys as well. So if you get that much money, you're going to need some big time accounting professional help to get you through that single audit. So here's what it'll do. It'll summarize. In this case here, we had $155,993 of funds, and we can go forward. Okay, the next page looks something like this. This is from other funds received. The first one on the top here, RHC COVID-19 testing funds received, $49,461.42. That's the NARHC monies that we received for COVID RHC testing and mitigation. That's where that goes. It will pre-populate for you. You do not have to put that number in. Then this clinic got a SBA loan, the PPP loan, that was $92,000. Some of you guys got another one that would be reported in either the first or second quarter of 2021. So you want to put that in there if you got a second PPP loan. And do not put in this. Some people have been putting this $49,461.42 in this HHS CARES Act testing. I've asked that question, have not got an answer yet, but my assumption is not to put it in here because that would be sort of double counting. We'd be double counting our other funds. So I would not put it in there. So that's what I've been telling people. Do make sure that if you get FEMA, a lot of people have gotten FEMA funds. If you've received the funds, you want to put it on there. If FEMA has told you they're going to give you some FEMA funds, but they haven't, the check hasn't been received, don't put those funds under. There's an FAQ just last week when, from the federal government that said that. You're going to have to put zeros in all these fields. If you just leave them blank, it's not going to let you go forward. So remember to put your zeros in and go forward. If you do put a zeros in and you go do something else and then you really haven't looked at that information, go back and make sure you look at it, make sure that it's right. Because I've been known to do that, put zeros in to get somewhere and then like, oh, did I even really look at that information? Okay, next question. How does provider relief entity determine whether an expense is eligible for reimbursement through the provider relief fund? You basically have to ask yourself two questions. And this first question is very easy because pretty much everything we do is it related to prevent, prepare, or to respond to coronavirus? Pretty much 100% of what you do is going to be for that. The second question that you have is a little bit more difficult though. Were these expenses reimbursed by other sources? And if they were, then you can't claim them. If they were not reimbursed from other sources, then you can claim them on this report and get this reimbursed through the PRF funds. The big question comes from cost reports. Well, we put this stuff on we put all these expenses on the cost report. Does that mean that we have claimed and gotten money for that? Our answer has been, I guess our thoughts is that we put these expenses on the cost report. We've put them all on the cost report, but Medicare's capped our reimbursement at $86.52 per visit in 2000 and last year. So, and our cost per visit was $140. So we've got all this cushion built in of expenses that were not reimbursed by Medicare. We didn't get paid that. We actually had a big loss on our Medicare patients because the cap rate was way too low. Thank goodness. And again, thanks to the RHC, that is changing over time. Our cap rate's going to go up to $190 per visit over the next 8 years. But right now, from our starting point in 2020 cost reports, that cap rate was $87.52, if I remember correctly. I can't believe I'm having a hard time remembering that. That means I've got way too much information in my head. Okay, so our assumption is that cost report is not going to affect us, especially for our independent rural health clinics, who we mainly work with. Now, if you're provider-based, that may be a different answer. So you want to talk to whoever's preparing your cost report and doing your PFR funds for you on that. So, but those are the two questions we need to ask. Was it reimbursed from a different source? Okay, and here's a listing from HRSA on what types of expenses you can put in this portal here. So you see they give you a nice little listing of the types of things. Telehealth, everybody had to go to telehealth last year. That's an incremental expense of COVID. PPP, all of our PPE, all of the personal protective equipment that you're having to get, that's going to be your expenses. I've looked at invoice after invoice of PPE over the last 2 or 3 weeks when we're doing this reporting. All the Lysol, all of the hospital grade disinfectant that you guys are using when you're cleaning every room, you know, the canopy that you had to build so you can see patients outside, all that sort of stuff is directly related to COVID, and you can count those expenses here. If you received over $10,000, then you do have to report in this portal. And the good news is, again, if you receive between $10,000 and $49,999, you only have to report 2 categories of expenses: G&A and other healthcare related expenses. Those are the only 2 categories you have to use. Now, if you have 500,000 or more, then you have to give a little more detail than you have there. So that's just repeating what I just said. And in here, it's confusing. Let me tell you this right now. It is very confusing what's in the portal, because the first First thing you're doing here is, and this is a real report that I was working on this morning. Here's by quarter. We're putting in. Okay. These are your funds received. Let me see. Let's go down here. Whoops. Go. What did I just do? Okay. PRF expenses cannot exceed. This particular clinic received $142,268.42 of provider relief funds. On the first page of expenses, you only can put up to how much funds you received. They received 142,268.42, and there's the number right there. I was looking for it, I couldn't find it. Total PFR funds received in period 1 was 142,268. On the first page of expenses, you have to limit it to that number, 142,268. On the second page, they basically ask you to put the same exact information in that says unreimbursed expenses, and this page, it can exceed how much money you received in period 1. So what I've been telling people is put all of your expenses in there, because in the future, with this phase 4 funding, there may be some more money. Here we've got this particular clinic has an extra $100,000 of expenses more than what was in here. And so in this case, you want to make sure you include that. In fact, I basically just plugged this 100,000 in here to get the number up higher, because this particular clinic had limited it to the 142 on both of these pages. Don't limit the second page to what you've received. Put the full amount in there is what I'm going to tell you, and so that's going to be important that you do that. Because again, you may get some new monies from that. So here's just a summary of this general. This is in this particular clinic here, we had 281,000 of expenses. We only received 155,993.43 of that. So to me, that's confusing the way they do that. Here's one clinic that didn't report any expenses at all. They had tons of lost revenue, so they used lost revenues, but they did compute one thing, which was their additional tax burden from all of this money. So remember, your additional tax burden is an expense that you can claim. So they claim that, and then they claim lost revenues for the rest of it. Here's, if you use up all of your expenses and you don't have to fill in all of the lost revenue information by payer and by quarter, but they will make you put your calendar year net patient revenues from 2019 and 2020. But that's all the information that you'll have to enter there. And then here's from the Q&A session the other day. We are not claiming lost revenue. Do I need to complete the section about lost revenues? And here's the HRSA team. They say, no, you only have to report patient care revenue from 2020 and 2021. That's all that you have to report. So that makes it very easy for you. Let's go into lost revenues now. There's 3 options. 99% of people are going to be using option A, actual 2020 net patient service revenue compared to 2019 net patient service revenue. So that will be what 99% of people use. B is if you have a budget approved before March 26, 2020 for the next 2 years of activity, then you could use that. No rural clinic's going to have that. Let me just tell you, that's not going to happen. And then C, any reasonable method of calculating lost revenue. That one's going to open you up for additional audits. But some of you people, if you've had tons of COVID testing, or if you've added additional providers, that may be your only hope, is to do it that way. So I would definitely recommend, you have to write a methodology of how you're going to come up with it, but that may be what some of you guys have to do. I don't think it's the end of the world. It's just a little bit more difficult for you to come up with the proper methodology to do that. There's the budget stuff again. Nobody's going to have that. Here's option 3, option C. This is the one where you can, any method you come up with, it will increase your likelihood of an audit from HRSA, but you just want to write up your methodology. And if it's reasonable, then it should be good. So you just basically have to be a little creative there and come up with your lost revenues. In this case here, I know of one clinic that they added 2 new providers in 2020 that they didn't have in 2019. What we're going to do is remove the revenue for those 2 new providers from 2020, and then we'll compare apples to apples at that point. So that's something that you definitely want to look at if you added providers, or if you're one of these people. I know we've got a lot of people that the COVID testing really increased their revenues in 2020 and 2021. That may be the way to do that. We did get really good news about lost revenues. Is each quarter stands on its own. This particular one that we did, they had 91,000 of lost revenues in 2020, but the other 3 quarters were good. So we can claim 91,085 of lost revenues, versus if we netted each of the quarters out, we'd only been able to claim 31,000. So that worked out great. And so also, if you have lost revenues and you've not used those up during this period 1 report, we can carry those forward to period 2. So that's great news as well. Let's look at a real live example here. Basically, you're going to use 2019 as your base year to compare your revenues from 2020 and 2021. So in this case here, these are 2019 numbers. We had 244,000 received in Q1. Q2 was 233 grand. Q3 was another 233, and then Q4 was 234,000. So we had 936K for the total year. One way, here's a good thing too. If you can't keep up with your Medicare receipts, you don't have a good payer mix report, you can run your PSNR reports. It'll tell you exactly how much collections you had from Medicare patients on that PSNR report. Just break it down by quarters. That's an easy way to get some monies here. So here is 2020, how much we collected. 223 the first quarter, and pretty much the same as before. 190, you can see our numbers going down. 216, our numbers are going down a little bit, and 175, we had a really bad quarter there in 2020. So our totals were 805,732 for the year. So you can see we're going to have some lost revenue in 2020. We get this question a lot. My net patient cash collections does not tie exactly to my patient accounting system receipts by payer. Is that going to be a big problem? And I don't think it's going to be a big problem. The funny thing is, I think HRSA only has 1 accountant in the whole system. So that's what people were telling me. So I don't think they're going to be tying down everything. So it's a relatively low audit risk for that. Basically, I would true it up the best you can to net patient accounts, net patient accounts received during that period of time. It's never going to be exact. I've been doing cost reports for 35 years, and none of these numbers tie. I mean, we've got rural health clinics. A lot of them have 4, 5, 6 employees. None of them have accountants on staff. So none of these numbers are going to tie in exactly. But and I wouldn't lose any sleep if it doesn't. Okay, 2021. Here was our net patient revenues for this particular clinic. We're starting doing all the COVID testing here, so you can see the numbers are going way up. 290, 283. 310, and then here is a table of computing my lost revenues here. So here's my base year is 19. So I'm comparing my 21 to 19. I'm comparing my 20 year, my fiscal year to 19. For Q1 for 20, I had 223,000 versus 245 the year before. My lost revenue is 22K. Q2, 42K, Q3, 6, and Q4, 60. So we had 130 of lost revenue for 2020. And notice we have 0 for 2021. Our numbers in 21 are much higher. That means we're not gonna be penalized because we're above that. The lowest number we can put is a 0 here. So our lost revenues were 130. That's good. That means we're gonna get that money. And the quarters that we do better are not going to penalize us. So that's the key to that. Okay, next one. We're fine. We're getting near the end. Thank goodness. Personnel, personnel, patient, and facility metrics. You want to make sure that one thing you got to be careful is you'll see this will come up when you first go in here. Make sure you click in patient metrics and facility metrics and fill that in as appropriate. You're not going to, as a rural health clinic, you're not going to have facility metrics, so you don't have to worry about that, but your patient metrics will be outpatient visits by quarter. You'll have to fill that out. So in this case here, we're filling in, and notice here in personnel metrics, we've got full-time, and then we got to click up here where it says part-time, contractor, furloughed, separated, and hired. You'll have to go into each one of those sections of the portal and fill out that information for these 10 quarters. Not like we don't have anything else to do in the world, but to give them all of this information, but that's what they're asking for. And then here, your outpatient visits, again, they want you by quarter, your number of face-to-face encounters, and sort of same, I think we had the same question about tying things in, if this is not exact to what my cost report says or anything like that. This stuff is for information only. So it's not going to be the end of the world if you're off by, a few visits or so. So you'll be fine there. And then, they're asking you how you spent your money here. You basically have to move this information over from one side to the other to tell HRSA how you've used this information. Finally, they get down to your survey and they ask you a bunch of questions, and you're supposed to respond to those questions. Again, this survey is not required, but you need to make sure that you fill it in the best that you can. Or the optional piece of it. Let me show you the optional piece of it just a minute. Before I do that, do not submit. Hang on to this the last week in September, because if something changes, we can change that information. And then here's a great survey answer that I got from one of our clinics today. Really do, take your time, show appreciation. This money has gone a long way to helping our RHC survive. We would be without a lot of RHCs without this money. And so we're very thankful to the government has responded just tremendously to the need that we've had as far as giving us money, and CMS, oh my goodness, the folks at CMS have done a wonderful job, NARHC, National Rural Health Association, all these organizations have been just stressed with work. And so we do appreciate, appreciate that. What will happen is you will get a summary of your, at the very end of it. What I would do again is print off a PDF of it, where just click into where it says print, and then instead of hitting a printer, just hit PDF, and you'll create a PDF of it, and then you can review it. And so what this will do, this will show you what your lost revenues are. It'll show you what your expenses were and your reportable PRF payments. So, and it gives you this number here. You want it to be 0. Unused other PFR funds after lost revenues reimbursement, 0. That means we did not have to pay any of this money back. That's the number we're trying to get to. In this particular clinic, we had 82,000 of expenses. That was that. I think that was the one with the tax benefit. And then we used up some of our lost revenues for this. It looks like we used up 64,000 of lost revenues. We can carry forward $66,000 worth of lost revenues for a future period to use as well. So that's the summary. That's the way you want this thing to look. Here are the questions from this very strange session that we had last week about provider relief funding, when HRSA basically just didn't say a word, and you basically just had to figure out on your own that you need to start typing questions in, and they would start answering them. So we need to know if our revenue as a company in 2020 is greater than 2019 because we added COVID testing as a new project. In this case, there will not be lost revenue, correct? And what HRSA says is you can use option 3 and compute it using option 3, which is what we've been telling you earlier. Should SBA loans be included in your provider funds received? You're going to put that in other assistance receipts. So we did that correct. What is the difference between PRF funds and unreimbursed expenses? I've got this question too, and they basically give you a link to it. So I'm not sure why they ask for both of those. I guess my rationale is in the future, There's going to be some additional monies for that unreimbursed expenses. Maybe it'll get paid in phase 4. So that's why I want you to put as much as you can that's reasonable in unreimbursed expenses, and that would be great. And then it talks about mortgage payments and utility expenses being reportable. Those are reportable. Most of the things they say are called healthcare related expenses versus G&A. So that is answer to that. Executive summary. Time is running out. September 30th will be here for you know it. We do have a grace period of 60 days. Document your work and then hang on. Don't press send yet. Let's wait till we know for sure that we know all the information, because things that I thought I knew a month ago have changed in that 1 month. So let's go on here. I mean, we're already one hour in. So cost reporting. Let's go into, let's see, 1:15. No, I'm 50 minutes in. Okay. Cost reporting, just a real quick little thing about cost reporting. One of the big questions that we have is what comes first, the chicken or the egg? We're very worried about provider relief funds. If we included these same expenses on the cost report, are we able to claim it on the PRF fund report? And for independent rural health clinics, I think it's pretty safe to say that we're okay there. This is one of those, this is the FAQ that HRSA has given us, which really tells us nothing. It just gives us a link to about a 2,000 page manual and says, here's your answer in this 2,000 page manual. Well, your answer's not in that 2,000 page thing. So what I've come up with is I looked at our cost reports to see what our cost per visit is and how much we were reimbursed. And of course, it is, of course, we're, my wife is calling me. That's why I'm distracted. Our cost cap is $86.31 in 2020. And our average cost per visit was, what is it, $131.90. So we are underpaid $45.59 per visit. You multiply that by your total visits, that means we're basically underpaid $482,291 for that. That's what I call my cushion. That's per clinic too, by the way. That's per clinic. In total, for these 20 that we took a sample of, we were underpaid $9,645,815. So you can see that we're way below the cap. I don't see this is going to be a problem going forward. Again, we just really haven't gotten good answers. We've gotten very vague answers from everybody I've asked. What we did on some of our clinics at the very end, and this, we didn't do it for all of them, but for a few of them, we actually pulled out all the PFR funding received during that year and just did not include that as a part of we actually disallowed our expenses for. That's the safest way to do that, because we know for sure we did not claim it on those cost reports. Now our cost per visit went way down, but it didn't affect our reimbursement because we were so far above the cap. So that's one thing that you can do. We did exclude it against physician compensation because that was the largest number that we could find in the cost report as well. Okay, everybody's doing monoclonal injections or infusions and COVID vaccines. What's important about that is keep up with your costs, because Medicare is going to pay for your cost on the cost report. Very similar to flu and pneumococcal, except we're going to include Medicare Advantage and replacement plans in our numbers. You need to keep up with them separately because there's two different places on the cost report, for one for Medicare Advantage patients that are getting COVID vaccines and monoclonal antibodies, and there's a separate place for your Medicare original patients, your red, white, and blue patients. So keep a log, keep them separate. Keep up with your supplies and your expenses up for this monoclonal antibody. It must be very expensive, although we don't have to pay for it. Thank goodness. I think it costs like $1,000 every time you do one of those infusions. Just what's in the bag. We're not paying for that right now. We're not paying for the COVID vaccines either, but keep good time records for the administration of it. If you bill it fee for service on your vaccine, for your COVID vaccines, Fee for service people are getting $40. You're also getting $450 fee for service if you do the monoclonal antibodies. If you're a hospital or if you've got locations that are not rural health clinic, you are much, much better off doing them in the non-RHC setting. That way they will not go on the cost report. You're not going to get $450 for those monoclonal infusions on the cost report. I just from what we've looked at so far, it's going to be nowhere close to that. So if you have that option, you'd want to do them off-site away from the rural health clinic as well. So we'll show you, and then there's where you can find the rules on that. We just made up some fake work papers and entered into one of our cost reports here. In this case, we did 1,000 vaccines. We had 15 employees in this particular clinic. We did 500 monoclonal infusions, and we had total hours providing. We kept good time records. It took us 15 minutes to give one shot, and it took us 75 minutes to do the infusion. So we kept up with our records there. There's our time there. There's the number of hours that we actually took. We just multiply these two numbers here. That's our percentage of healthcare time that we put in the cost report. And then here's where we put the expenses. I made a reclassifying entry to get $10,000 worth of expenses related to COVID-19 vaccines and medical supplies, the PPE that we had to get, maybe for a monoclonal, maybe we had to set up a certain area for people that are getting those infusions. But I'm just assuming our expenses were $10,000 each. Have no idea what it's really going to be. But then when we ran this through the cost report, we could see we only got $110 for monoclonal antibody products, and we only got $32 for a COVID-19 vaccine. So again, if you can do it someplace besides the rural health clinic, I think you guys are going to be much, much better off if you do that. More information. I know you want more and more information about this, and it's hard to keep up with. But Thursdays at 3, there's webinars from BKD that they go over provider relief funds, and those are really good as well. And questions. Okay, we got a bunch of, let me open this up. I dread open this thing up. Oh my goodness, we've got questions. I'm gonna try to answer a few of these till we get about 10 minutes or so. We'll do questions. First question is, do we need to report the nursing home and nursing home facility spaces, or is that only for nursing home facilities? Yeah, I think, yeah, that's the nursing home infection control stuff. You're not gonna have to deal with that. So that's not a part of what you guys are reporting. So just ignore where it says nursing home infection control, ignore that. August 4th, 2020, we received money that says HHS stimulus. We're on where should the other assistance, should we put this? On that one, you're not gonna put that on it. That falls outside of period 1 money. That's an HHS stimulus payment. You're gonna report that money in period 2. And that report is going to be due March 31st, 2022. So you don't have to worry about that money yet. Don't put it anywhere. Are we supposed to use the total? Let me move down a little bit here. Are we supposed to use the total expenses eligible, or are we expected to determine what percentage of our business was COVID related to use that percentage of PRF allocations? Yeah, I would not use the total. I would probably use a percentage of your expenses. The way I think about it is, if I had the expense, I'm going to use 2019 as my base year, and just use that. So that's going to be my base year, and then I'm going to look at, okay, in 2020, what were the new expenses? Those incremental expenses that we had before, that we did not have before, things like all the PPE and all of the infection control stuff that we had to purchase. I'm going to get all that stuff, and that's going to be my direct expenses. And then I'm going to say, well, how much, what percentage of lost revenue did I have from the previous year? Because we have to survive, and in order to have availability, maybe our revenues were down 10 or 20% from the previous year. Well, that PRF funds kept us going. So maybe 10 or 20% of our mortgage we can use as PRF funds, because we needed that to survive. That's sort of the rationale that I use for that, because you had a lot of those expenses before. The incremental expenses, you're going to get it 100%. And those types of expenses that were still within your base year, then I would use some type of percentage like that. We were a rural health clinic in 2019. We cannot show a loss from 2019-20. Do we just enter the amounts even though we did not show a loss? The HRSA doesn't care if you're a rural health clinic or not. What you want to do, you were operating in 2019, so you want to show your revenues in 2019, whether or not you were a rural health clinic or not. So just put your net patient collections in there, and you can use that for your lost patient revenues. So nursing home visits, will it be reported under outpatient? Oops, where'd she go? So nursing home visits, it will be reported under the outpatient tab. Do you know of a report or suggestion to confirm how many Medicare patients were seen in 2020? Yeah, okay, the first one, okay, let me read this one. So nursing home visits will be reported under outpatient. Yes, nursing home visits are definitely outpatient visits for you guys. Do you know of a report or suggestion on how to confirm how many Medicare patients were seen in 2020? Yeah, just use the PSNR report, run it by quarter for 2020, for 2019, and 2021, and that's as good a number as you're ever going to get. I need clarification on reporting the extra taxes that would be paid. Where exactly do I enter that amount? That's going to go in, I put it in Q2 of 2020, even though, because you probably, if you're like me, you haven't done your taxes by then, but if you received, $200,000 of provider relief funds and you're in the 40% or 30% tax bracket, then, that's $30,000-$40,000 of extra taxes that you're paying on that. I would put that in Q2 of 2000, of Q2 and of 2021, I think. Yeah, Q2 of 2021 is where I would put that, just where the examples had it in there as well. Lost revenue is all payers, not just Medicare. Is that correct? Yes, that is correct, Linda. It is all payers. So what you have to do is compute it by what were your patient collections, your net patient collections from Medicare, Medicaid, self-pay, no pay. I mean, they make it pretty much a nightmare for you guys getting all that information. If we used all PFR funds on expenses and we still have lost revenues, it does not give us an option to report lost revenues because we used all our PFR funds. How do we report lost revenues? Dr. Reddy, that's just the way the portal works. You're not going to be able to report those lost revenues. What I would do is next time when you fill this out in March, if you don't have enough expenses, then you'll be able to open up that piece of the portal and you'll be able to put those lost revenues in, and then you'll be able to get those lost revenues at that time. Okay, let's see, that's Dr. Reddy. Let me go on. Can you clarify what you mean by claiming all your expenses? Would you claim all expenses even if you receive payment for some of them? Would you minus the PRF expenses from total expenses and report the difference as unreimbursed? I don't think you can do it that simple. I mean, again, what I said before is look at your incremental expenses that you didn't have in 2019 and get some good support for those. Then look at what your lost revenue was and look at the expenses in 2019 and use that as sort of as your fixed expenses and multiply that percentage by it and then claim that. That's the way I would do it. I have clinics that aren't rural health clinics. Do I include the revenue and expenses for every clinic or only my rural health clinic? Christy, this report doesn't have anything to do with rural health clinics. It has to do with provider relief funds and provider relief money going to that tax ID. So you're going to include everybody in there it's a part of that tax ID number is what you're going to be reporting on. How to obtain the slides for the webinar. So they're in the they're on our website. This answer is always the same. I get this question every single time. People, it's going to be on our website at ruralhealthclinic.com/COVID-19. It's going to be in our Facebook group. They're already posted there. So you'll have those. We're recording this. The recording will be in both places as well. Do we need to report hospital visits, or also is that hospital only? So in this case, we report those visits at the clinic, not including the nurse. Rena, that is a good question. It says outpatient visits. I would not include those hospital visits in. I would just sort of use the rural health clinic cost reporting mentality for that. I don't think there's going to be. They're not going to shoot you if you put the hospital visits in there or you don't. It's for information only. But I think because you've already captured information that way for cost reporting, it's going to make it easier for you. Okay. Okay, let me go down. You didn't understand we were not a clinic before coming an RHC. We had no revenue. Oh, sorry, Pamela. Okay, so you weren't even open in 2019. Yeah, that's going to be hard to get your lost revenue from that. In that case, you may not. I mean, you only have really the only option you have is go into option 3 and try to do a methodology for that if you need lost revenues. The other, or I mean, if you can claim all of your expenses that you had in 2020 related to COVID, those incremental expenses, then that's going to be your best bet there. Otherwise, you're going to have to go in and do that option 3, come up with the methodologies like, okay, here's what our revenues would have been in 2019 if we're open. We'd planned on having this many people and generating this amount of money, but because COVID came, we no longer had that amount of revenue coming in, and that would be our lost revenue. That's going to be much tougher to prove. I would try to get your expenses in that case. Okay. All right. I've gone through all of the expenses there, and thank you guys for listening. I know this was hard, and it was hard for me, and good luck on this. The great news is we have 60 more days, and the great news is you've got some more money coming to you. We'll learn more about how you guys can get that money going forward, and thank you guys for everything you do. I know it's just scary what you're doing. A lot of you guys, I know some of you out there have helped my daughter. She's had COVID, and oh my goodness, it's been a nightmare the last few months for everybody. So thank you for what you're doing. You are heroes, and we appreciate you, and thank you for coming today. Bye.